I'm Charlotte McLeod with the Investing News Network, and here today with me are Rob McEwen, Chairman and Chief Owner at McEwen Mining, and Michael Meding, Vice President and General Manager at McEwen Copper. Thank you so much for joining me. Great to have you both on today.
Great to be here.
Thank you, Charlotte, for inviting us.
Yes, I'm really happy to have you both here today because there's a lot of exciting recent news around McEwen Copper that we can discuss. So the first point I want to mention is the $155 million investment from a subsidiary of Stellantis, which I believe amounts to a 14.2% stake in McEwen Copper. I think this is really interesting because Stellantis is a large car maker. We've seen car companies get into battery metals like lithium and cobalt, but I believe copper is a little bit unusual. So if we could start by talking about why Stellantis is making this investment and what they're seeing in McEwen Copper.
Let me just make a comment and I'll pass it over to Mike. That this is the first occasion where an OEM, a car maker, has invested in a copper situation directly. They've done it in lithium and in some nickel, but this is the first time they've come into copper. In terms of how they became involved with this, Michael will deal with that.
So we at McEwen were thinking that a logical strategic partner would be a car manufacturer because we produce a metal that will be used in the green energy transition. There's significant amount needed in every car. There's significant amount needed to upgrade the grids, to also produce all kinds of things that contribute to the green energy transition, like solar cells or hydro generators or windmills. So we thought, well, Argentina is an industrialized country, and there are lots of different car makers in Argentina. And why not talk to them? Why not have a conversation on what is it that can be done? And as some other people said, copper, I think, is a matter of national security for those countries as well, because it's absolutely essential for the production. So we contacted a couple of car manufacturers, and Stellantis came back and said, "Hey, we would like to learn about your project." So then we started doing a presentation. We brought the colleagues to site. They were impressed with what they saw. And then we started negotiation. We did the due diligence, which we recently completed. And Stellantis invested 30 billion Argentinian peso, which would be at the official FX rate of the time of the deal in Argentina, $155 million. Now, Stellantis does this for several reasons. First of all, they do it to ensure future copper supply. Because that's critical for them. And I think that Stellantis also thinks about since they operate in Argentina for, Rob, 100 years?
100 years.
What can they do to expand their business footprint in this country? And for them, it makes sense from a strategic point of view from all sides. So that's the reason why Stellantis went and asked for this participation.
I think that's really, really exciting. And, you've highlighted how this is quite a unique situation with the copper investment from an OEM. Do you think that's something that now we will start to see a little bit more of?
I'm sure you will. It's almost like going back to the days of Henry Ford when he went out and said, he went to South America, down to the Amazon, and bought rubber plantations so that tires could be made. He went up to Upper Mission, bought copper mines. He went into Sudbury and was involved with the nickel mining up there. There are two things driving it. One, to control your supply, because they're all transitioning their production lines to EVs, and very rapidly. And the other is the fragmentation that's occurring right now in global trade. So there's a big uncertainty as to where you're going to get your product from.
And on top of that, what we aim to produce that plays very well into this is we aim to produce for the first half of the life of the mine, we aim to produce copper cathodes. So that is directly industrializable product that can be used for wire making, for engine making, for all kinds of things. It's not a concentrate that you need to ship around the world that has a significant environmental footprint that needs refineries, for example, in China, where there's lots of tension going on at the moment between North America and China, or to India or to Europe. And that means that there's a lot of value add already in the country.
So this happened recently, and then on top of that, you also have news from Nuton, which is a venture created by Rio Tinto, investing an additional 30 million into McEwen Copper. So I wondered if you could explain what Nuton is and also talk about this investment as well, because I remember from our previous discussions, Nuton has that interesting technology angle.
Yeah, they have the technology. They're doing testing on our ore right now, and the hope is that their technology will do what they say it will, and that is increase the recovery rate and reduce the recovery time by a considerable component. They're suggesting that recoveries could be realized within a quarter of the time of conventional heap leach processes. So, and lift the recovery rate. So they now have 55 million invested. And I find it quite interesting that you have the number 2 mining company in the world, represented by Rio Tinto and their Nuton process, and you have the number 4 auto manufacturer in the world on the shareholder list, representing a block bigger than 28% of our shareholdings.
Definitely. I think that speaks to the importance of copper moving forward into the future. So basically, there's a lot of money coming into McEwen Copper at a time when it is a little bit difficult for companies in the mining sector to raise money. I think we should talk about plans for that money, how the project is moving forward. I know there's a lot of drilling right now and progressing to a feasibility study.
Sure. So we have drilled this season a little bit about 18,000 meters. We need to drill a lot more in order to drill the payback pit out to measured certainty. We also need to have a lot of metallurgical material for metallurgical testing for the feasibility study. So a lot of the monies that we have will go into drilling in the project. We also have slated our environmental impact assessment to be published by mid-April, which is not far away. That means we are filing for our environmental permit for exploitation of the future mine by mid-April this year. Our plan, with a little bit of tailwind and good weather and sufficient drill productivity, we aim for completion of the feasibility by end of 2024. After 2024, we would go into engineering. That typically takes a year to 2 years. And then we would, in parallel, start to order long lead items and then start stripping and construction.
Okay, sounds very clear. I wondered if we could talk a little bit more about copper supply and demand dynamics. So we've been speaking about copper's role in electrification, which will be an important source of demand. And on the supply side, we know that disruptions are fairly common among large mines. And also in the pipeline, there aren't as many projects as we probably need. So if you both could highlight what you would want investors to know about copper supply and demand at the moment, that would be great.
Well, you've had every car manufacturer in the world say they're going to build electric vehicles, and some of them are looking at converting their entire line by 2030 and 2035. That's a brand new source of demand on the copper, the annual supply of copper. And Goldman Sachs and a number of others are forecasting there'll be a large deficit as we move into 2030, 2035. And unfortunately, as you know, Charlotte, it takes a long time to get a mine permitted. But even before that, the number of discoveries, the frequency of discovery, and the size of discoveries have been declining. despite the amount of money being spent to find them. So, yeah, there are people coming out and saying, all right, we're going to be in a short supply situation. It'll grow worse as time goes along, and as a result, I figure the price of copper could be going up over $10 a pound.
So if I may add what Rob already said, at the moment we have an annual consumption of about 26 million tons. So between 4 and 6 million tons of that is recycled, and the rest is coming from mines. To give you an idea, Chile produces between 5 and 6 million tons per year, and is the biggest producer. Now, there are some companies that do forecasting, demand, supply, that say, well, under an accelerated transition scenario, if you want to go back to before industrialized time, minus 1.5, minus 2.5 degrees centigrade, we would need about 68 million tons of copper per year by 2050. That's 40 million tons more than we have at the moment. 40 million tons is about 7 times Chile. We are not going to discover seven times Chile, the amount of mines that are operating, when we see in the world declining grades and more and more difficulties when it comes to permitting. So that's why we think that our project comes at a very good time when there will be a significant demand for copper. Since not all this demand can be met, we expect prices to increase. And that means that we think we can make a good contribution to the society in San Juan, where we operate, and we can help Argentina industrialization, and we can provide significant returns to our shareholders.
One other point I want to touch on when it comes to the copper market in general is what we have going on with recession. So this continues to be a concern on a global level, I would say, still at the moment in 2023. And of course, copper is connected to industrial uses as well as electrification. So what are your thoughts on how that impacts the market? Any ideas there?
Sure. Copper is often referred to as Dr. Copper, and that's in reference to its close association with a strong economy. Now, they are talking recession, and you say, well, is it going to be a global recession, or will it be a recession perhaps just in the Western world? You have Southeast Asia that continues to be urbanizing, and that process requires enormous amounts of copper. And so I think the population is not slowing down, growing, and it's continuing to become more urban. So you could have a moderation in demand. Maybe the electric cars are going to be made, but there won't be as many people buying them as the manufacturers are thinking, because they tend to be more expensive than a conventional internal combustion engine. But I think that energy transition, even if we have a recession, will be continuing to move forward. And you have a lot of the existing copper mines have been going for quite some time, and they're getting lower grades and their production is falling. So new mines pop up and fill in some of that gap without really changing the total demand. So I think copper for the moment will continue to do well because of those factors.
I think that makes a lot of sense, and it's good to lay out. So another thing that I think it's important to look at is McEwen Copper is part of McEwen Mining, and I'm sure investors will be interested to know how McEwen Mining itself is affected by everything that's going on with McEwen Copper, how it relates to the entire business.
Well, it has a very positive impact on McEwen Mining from a couple of standpoints. One, the first financing we did in McEwen Copper was at $10 a share. And this is one we just completed. Rio, through Nuton, paid $18.75 a share. So that's an improvement in the value of share value of 87%. And if you look at the number of shares, that puts an implied value on the Los Azules property of $550 million, up from $260 last summer. Now, in McEwen Copper, in order to make this deal go forward, it sold some of its interests. And there it went from a 68% interest to a 52% interest. But the value of McEwen Copper on their balance sheet increased from $168 million to $290 million. And that translates into, behind each share of McEwen Mining is $5.70 of McEwen Copper. So when you look at our current market value, last week we were trading below $6 at one point, and you're paying for the copper, and you get 150 to 170,000 ounces of gold that we're forecasting to produce this year for free. And McEwen Copper, part of the process, there is $47.5 million that is going into McEwen Mining, and we will be reducing our debt by 38% from $65 million to $40 million. We've increased the value behind every share of McEwen Mining, improved the balance sheet. So it's quite positive for both companies.
I think that's quite key to understand. So thank you for going through that with us. Maybe we can also take a broader look at what's going on with McEwen Mining, because we check in with each other every quarter or half year or so. And there have been some difficult times for the past couple of years, but I know that for the most recent results, they were looking a little bit better. So I think it's worth touching on that and letting people know where that stands.
Thank you, Charlotte. Well, the last 2 quarters, we've been putting out improved results. The operations have stabilized. We expect to produce about 10% more gold than we did last year on a consolidated basis. Costs will be lower. Our Fox complex that gave us quite a bit of headache in the last few years will be producing gold at $1,000 an ounce cash cost, which is quite attractive. Gold bar is a little more expensive. It's at around $1,300 an ounce, and our San Jose mine is around the same range as gold bar. What's important is that stabilization. We're going to have to tack on a couple of more quarters before the market really says, I think this is sustainable. But looking at our share price performance from a technical standpoint, we have broken on the upside the 50-day, the 100-day, and the 200-day moving average, which is a very strong technical signal that there's a very positive momentum in the stock. And we did come down a long way, so there's quite a bit of room to catch up on. In the last 5 months, we're up over 140%. And we think there's still a great deal of room on the upside of that. And I suppose I feel that way. I have a large investment in the company, as you know, and I'm in for $220 million, and I'm a little underwater right now, and I'd like to get my head above water shortly, and I think it's coming.
I certainly hope so. And I do remember that you have that large investment, so you're in there along with everyone else. I know also we're focusing on copper today, but I don't think I can let you get away without talking about what's going on with gold. So just briefly looking at the gold market and factors that investors should pay attention to in 2023, what would be important there?
Okay. There's been persistent central bank buying of gold, which suggests to me, and this is the first time in quite a few decades, that they're active in the market buying. And that suggests that they're rather concerned about the foreign reserves they hold and what value they might be losing. And gold holds value. So there's that. You've got geopolitical conflict around the world that is, people tend to go towards a safe haven, but it's also forcing countries together. China and Russia have always been pushing to get people buying their products, their commodities, their oil and other commodities with their currencies, the ruble or the yuan, as opposed to the dollar that was always used as the benchmark for any commodity in the world since the end of the Second World War. And so there's a new bloc that's starting to appear, and the war in Ukraine has brought China and Russia much closer together than ever before. So, and there are other countries that have sided with Russia in that battle with Ukraine, and they're in their own bloc. And you could look at the Middle East. America has somewhat abandoned the Middle East, or at least the Middle East is feeling that way, OPEC. And they're saying, well, we're not going to insist that people pay dollars, because when a country is trying to buy food or energy in the past, they had to buy dollars first to buy that product. And the U.S. never had to do that. They could just use dollars anywhere in the world for any purpose. So the dominance of the dollar as a reserve currency of the world, I think, is eroding. And I don't know how long it'll take for those other currencies to have the breadth that the dollar has. But as the dollar erodes in value relative to these other currencies, you're going to see commodity prices rising in dollar terms. The other is just something I've always spoken about, is just the enormous amount of monetary stimulation that's taken place as a result of the governments effectively stealing from their citizens by printing more money. And they borrowed a lot. And when we had all the borrowing out there at 0% interest rates, there was a lot of financial speculation. And the air's starting to come out of that bubble. And at that point, people start looking at gold again and silver. And for that matter, copper was a monetary metal because you had pennies.
We can bring them all together.
You bring them all together, and I think, one, McEwen Mining is really well positioned for that, but two, I think it behooves everyone to be taking a close look at what's going on. There's inflation happening, and I don't think that's going to abate anytime soon, and you need some hard assets to protect your wealth. And gold, silver, you might want to look at foods and energy as well, because we need all of those.
We definitely do. So that was great. Thank you for giving those updated thoughts on gold and other markets. As we're finishing up, if we could go back to both of you and just end with any final thoughts that you would leave our investor audience with about copper, about the company, about future plans, whatever's on your mind.
Go ahead, Mike.
Yeah, sure. I think that the Los Azules asset, as well as our other asset that we have in the U.S., Elder Creek, that we have optioned to Rio Tinto, Kennecott Exploration, represent a very interesting opportunity. Having been endorsed by Rio Tinto, having been endorsed by Stellantis through their investment, shows that both companies believe that there is a significant long-term value. We talk about a multi-generational mine, and that is currently a private company, but is embedded in McEwen Mining. And people that want to get this exposure can invest today in those, what I believe, significant projects.
Charlotte, I'd suggest to your viewers that they consider a portfolio of junior mining stocks, maybe junior energy stocks. That sector or segment of the market has been ignored and is trading at very low prices. And as we see a transition into gold, there's enormous leverage in those stories. If you can buy something for pennies, it could become dollars in very short order, with gold breaching through, say, $2,000 an ounce and heading higher, which I think is coming in the not too distant future. So that's an attractive place to make money. At least that's the way I'm feeling right now.
All right. I think that's a great place to wrap up. Thank you both for coming on to talk today about what's going on at the company. Really appreciate you taking the time during this really busy period.
Thank you, Charlotte.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Rob McEwen and Michael Meding.